Hey, welcome back to C-Suite
Welcome back. Here we
with
are.
us. So, Rob, today I'm going to question you
Ask
about,
away.
all
Yeah.
right,
Hold on. Let me get to my chat GPT.
okay. Homeowners,
Oh yeah.
homeowners insurance.
Homeowners. Big topic. Big topic. Hopefully you never really need a policy claim on that. But yeah, most folks, of course, in New York, if you own a home, you're going to have homeowners policy. And how do most folks buy it? Well, usually when you buy your first home, you don't know what the I'm trying to sound to make the beeping noise here, but you don't know what you're doing. Most first-time homeowners, unless you really luck out and you have like an overwhelming supportive group of friends and family that are like, hey, let me walk you through this process. Which some of us do, but most people buy their first house because I really like the landscaping outside, or I like the shingles, or the color of this, or whatever. Or I really like the street. And then you're so excited, and the realtor and the attorney and the banker just send stuff in front of you, and you sign your name 8,000 times like you're a professional baseball player doing autographs. And then you move into the house, and then you get the bill, and then you look at what you're paying for, not just your mortgage or whatever, but your insurance. And most people pay for their homeowner's insurance through their mortgage lender or bank or escrow, something along those
Right.
lines. Most of the time, it's just kind of in there. You know it's a lot, but you don't know what you got. Oh, that's a good rhyme.
Hmm.
You know it's a lot, but not what you got. There you go. I'm gonna trademark that. Yeah. Trademark pending, everyone. So here's the deal. Most insurance agents that can sell homeowners and auto, which I can, there's a lot of it's software driven. So if you were to call and maybe this is what happened to you if you own a home already. If you were to call your insurance agent that you may have car insurance with, and you say, hey, Mr. and Mrs. Agent, I just bought a house. Here's the address. That agent's going to put in the address. They'll ask you a few questions, and then they'll say, well, and here's your rate. Well, there's way more details that people should be knowledgeable about. So a couple things, because it's software driven. If you're not really taking the time to go through the weeds, which you really should do with your agents,
Right.
and if they don't want to, obviously give me a call. I'll do this with you because I did this for my own policy. I've owned two homes at this point, and very different policies for very very different reasons. Size of the house was different. The amount of utilities that could be a hazard was different. So, for example, if you have a house with a gas stove versus an electric stove, a fireplace versus a pool. There's all sorts of variables, and just putting in the address and the square footage, and sometimes they'll send what they call a drive-by appraiser. This is literally someone who gets paid, and there's nothing wrong with this. I'm just telling you how it gets done. Literally, people that
Just
get
push button,
paid to
right?
drive to addresses, they pull over in their car. Sometimes you see them and you think they're like, what is this person up to?
Yeah, taking
They're
pictures of
taking
the
pictures
house.
of a house, and,
Yeah.
and you see it a lot when there's a house for sale. That could be part of the closing process. That could be the insurance adjuster, excuse me, the bank appraiser. It could be the insurance underwriting team. There's a lot of drive-by appraisers that get paid to do this, and then they submit the picture to the carrier along with the information you told the agent, and then the underwriters look at it and say, well, this picture here, the shingles look older than what they say, and we're going to charge more for it.
Ah,
That's frustrating. So there's a lot of details that when you're buying a house, you're not even aware is going on in the background there between all these people that ultimately you're paying. One way or the other, you're paying for their decisions. It's better to get hands-on. So I welcome that. I welcome a full, like, okay, Rob, here's what I have. Go through the weeds. Some of it you might not need. Some of it might not be giving you what you need. And I'm going to go over two specific examples that happens almost every single time. If one of these two isn't happening with you, you're a rare bird, and I want to buy you a coffee and hear about how you managed to figure this out. So most people have one of these two things happening that they're overpaying for. First thing is the way dwelling insurance is calculated in your policy. So if you own a home and it's a home, it's a single family home, you live in that home, okay? There's two sides of the coin of whether or not that's gonna make it more expensive or less expensive compared to, let's say, a home you own that's rental property or a hunting cottage, a second home, if you will.
Mhm.
There's different risks involved, okay? You could have a large family in your home, and on the one hand, at least it's not a vacant property like a hunting lodge. So at least, someone's there to keep an eye on it. But there's also a bunch of hands and eyes and feet that can make a mess, right? Trip over cord, toaster burning down the kitchen or whatever. So there's all sorts of variables between the two. But when you hear the term homeowners versus dwelling, dwelling typically is not a residence for you, but it's a property you own.
Okay.
Okay, could be something you do seasonally, could be rental, could be in some cases, definition wise, it could be like a mobile home. It doesn't have the foundation like a home. There's all sorts of the word dwelling's used in a couple different ways here. And then within your homeowner's policy, there is dwelling as a line item. If you look at your policy, which I encourage you to do, look for dwelling. Look at the dollar amount that they're insuring as dwelling insurance coverage. And then hopefully, if not in writing, at least verbally, the agents told you this is the premium, this is the portion of your premium for the dwelling coverage. And sometimes the dwelling coverage on your homeowners is much greater than you would think for what that coverage actually does. Okay. As opposed to dwelling insurance by itself, standalone, typically is going to be a little cheaper because you're insuring less, right? Let's just use a hunting lodge. You're not there year round.
Right.
You certainly don't have it full of your fanciest, nicest, most valuable things, right?
Right.
It's probably a recliner, a rack for the fishing pole and shotguns, maybe a dartboard, right? There's not a lot of things in there. Your policy,
Cots.
yeah,
Yeah.
yeah. Your policy is going to be typically cheaper dollar wise because there's not as much. You're not insuring as much. It certainly is. It's unlikely to be as valuable as your primary home. Now, I could be wrong. There's scenarios where that's opposite, and that's fine. I'm just giving you the statistics. So you really want to make sure you understand the dwelling coverage, what that means. Talk to your agent, call us, we'll explain it to you. A little bit of a teaser, they can learn more if they call.
Right.
But seriously, folks, look at your dwelling coverage in your homeowner's policy. Okay, you already watched this video, do it. Take it 2 seconds. Look at what you're paying for that. If you don't know, call your agent, ask. If you want to know more, call us. But also contents and property in your homeowner's policy. A lot of people are surprised because again, it's software driven. Your agent will take your address of the house, ask you about, who's going to live in the house, some basic things they ask you. They'll calculate a quote. It's software driven. There's assumptions in the quote. The software assumes that if you buy a house worth X amount of dollars, that the contents in the house are worth X amount of dollars. Well, I don't know about you, but my first house I bought with very few possessions. I was in the service for a while. I had literally a recliner, a record player, records, of course, literally a duffel bag, and it was just a few boxes of dishes. Like that was it. All my contents fit in a 4-door sedan easily when I moved into my house, my first house. My second house, that's different. I had acquired some more things. But the point I'm making, folks, is that your first house, you're buying a homeowner's policy that probably has you paying for contents that you don't actually own. And it's not like you could have a claim where you get paid for that dollar limit without the actual losses. Insurance will not make you rich if there's a claim, it'll make you whole. The point of it is to replace what you have. So I'll give you a scenario. I recently discovered someone very close to me had a policy. Let's say the house is worth a couple $100,000. Their contents or property was also valued at a couple $100,000. Well, that's unlikely. It's unlikely that your personal property is equal to the amount of your home purchase. That's unlikely. But yet you're paying to have that coverage, even though you probably won't ever be likely eligible to make a claim on that.
Right.
So you're overpaying in that sense. One more detail. I know I said 2, I thought of a third one. Some people have within the contents rider, they might call it a rider when we talked about this over the phone, they'll have things like a specific name of contents. So for example, jewelry, fur coats. It's literally a line item in some cases because those are typically very expensive articles of clothing.
Well, firearms.
Firearms, that very specific one and a very specific type of coverage. Even pets. And we don't like to think of our pets as property, right? It's our family, but there's coverage in some cases, and of course, there's ways to have extra coverage that would discuss a value, a dollar value of pets. No one likes to hear that, but that, they're family, but insurance
Right.
carriers have a dollar value assessed to pretty much everything. So very often people see that, they go, oh, this is great. You buy your first home, you look at the policy, you might actually see, oh, jewelry, and you might see that listed, and you think peace of mind, like, oh, great, all my jewelry is covered. Oh, wait a minute. There's a hard dollar limit, and it's very, very low, typically just a couple $1,000s. So even a wedding ring nowadays, I would think might cost around that much or more. So certainly if you have a bunch of jewelry, you might think, oh, it says jewelry, but it's not going to cover all the jewelry.
It's not for each piece.
No, it's a certain dollar.
Like
This is
like
all
a flat rate.
all software driven. So what you want to do if you have an extensive collection of firearms, like Mike mentioned, or jewelry or fur coats or any of these things, or your pets, you want to take extra good care of your pets in the sense that if something happens, there's a value there. There's all sorts of things that you would want to talk to your agent about doing. And then there's what they call endorsement. You would basically sign for additional coverage. And if it makes sense and your budget can handle it, you could increase it. So you could pay a little bit more and have higher dollar limits, but typically the standard is going to give you a very low dollar amount for those individual items.
That's right.
Which is ironic because you would think that those are the most common things people want more coverage on. You would think that they charge you more
Right.
and give you more coverage, you would think, as opposed to something like dwelling or property, right? Just a general term of property, which is often higher than most people need or would ever get covered in an event. And I think that's kind of opposite, but nonetheless, we fight robots. So these software programs, I'm not saying any agents out there trying to intentionally charge you more on one over the other. I'm not saying that at all. I'm saying the software kind of has by default opposite what I think makes the most sense. You want to look at the actual things you want to insure, make sure that coverage is higher,
Right.
even if it costs you a few dollars more.
So basically everyone needs to check their policy.
Everything. And then there's some things that you might have more coverage and you'd never get an actual claim for, even if you had a massive event. You're overpaying for a dollar amount that you wouldn't even get covered on anyway. So yeah, get into the weeds on this, folks, or send it over to me. I don't know what else to do with my time. I got to read through something, so send it to me. We'll go through it line by line and make sure you have the best options for you. Good carrier coverage, premiums that make sense.
I actually have no, I have another question.
Hit me with it. Let's go.
Okay, so
Chat GPT is still open.
there's a scenario. Young couple buys a house.
Hmm?
It's cash purchase.
Oh yeah, cash
There's
versus
no
mortgage. No
mortgage.
mortgage. Yeah. Big
So
difference.
are they required to have homeowners insurance on their property?
Well, so there's a couple variables, and I certainly am not a lawyer or any of those things. So in certain states, like you could live in a state like Florida, which has an awful lot of risk with weather.
Mhm.
Hurricanes, biggest example, obviously. Florida, if you don't have a mortgage, you actually don't have to have homeowners, which is very unsettling to me. I would think you want peace of mind, but yeah, there's certain scenarios, certain states. New York, if you don't have homeowners, you're taking, in my opinion, and this is not just as an agent, this is like me as an individual. I think that's a lot of undue risk because you don't know if you were ever going to have an event. God forbid there's a fire or something. You've put all your money into this home. You've taken on the risk, especially if you paid cash. That means you worked hard. You saved all that money after paying your income taxes. You had put all that savings into a house.
Okay.
And if something happens, it's not your fault at all. Some horrible event could happen. Lightning could strike. I know it's an extreme example, but it does happen.
It does happen.
It does happen. That's why it's the major
But does
peril listed.
Does New York State require that if there's no mortgage attached?
If you don't have a
mortgage.
lender require, if you
Okay.
don't have a lender that has, keep in mind, the reason that mortgages require insurance is because you owe someone money on the property. So if you don't have a lender that you owe money to that has a lien on that house, now you might have other types of liens. That's why I would be careful not to say for certain, because it might not be a lender, there might be another lien on it. There might be sometimes there's contractor liens. So it depends if it's something being built, there's a construction lien or something along those lines. But assuming you have zero liens, you owe nobody anything and no one has a claim on that property, then you could go without homeowners insurance. I think it'd be ill-advised because again, you can't control accidents. That's what
Right.
happens. You might luck out for years and years and years.
And it just take one time now.
It takes one time, and then your life savings that was put into it, you'll never be made whole.
Right.
So even, and here's the thing, if you paid cash, your risk is already lower. Because if you think about it, the mortgage that indicates that you owe someone money. So it's not just you that has a liability, it's the bank that lent you the money that has a liability. So you're insuring two people, an entity and yourself,
Right.
to be made whole. Whereas if you paid cash, I mean, you could pick and choose even to insure a lower value of what you paid for
Oh,
and still have some type of coverage.
right. Oh, I
Just
didn't
for
even
peace
think
of
about
mind.
that.
You
Yeah,
pay 100
okay.
grand cash, well, maybe you're okay with the risk of insuring it for 50,000, or maybe you just want to insure the contents or something along those lines. There's all sorts of interesting things you can do when you pay cash. You can kind of custom things. So yeah, we're happy to help with that as well.
Well, thanks for the answers.
Yeah. Chat GPT. I make the joke because I think we're in this weird generation where, no offense to the young kids, but my gosh, I can't believe how many times you ask people for help and they're like, well, let me ask this software program that's 2 or 3 years old and they'll know more than I do.
Yeah.
Well, that might be true, but you want someone who has experienced claims policies, knows the ins and outs, knows the details. This is where you really want your fiduciary, your advisor, your agents to really get into the weeds with or for you, and give us a call. I do like I don't want to pick and highlight one carrier over another. That we don't do that, but I do like this tagline that one of them has out there that says, "We know a thing or two because we've seen a thing or two." That's really true. Agents, we hear and see it all. So give us a call. We're always happy to look at your situation. And just like anything else, review it regularly. Once a year, review it. It shouldn't take you long. And if you don't want to put the burden on us, we're happy to do it. We can set it. You pay your policy for a year, you set up for auto pay monthly, but either way, the policy is good for a year. We can look at it 2 months ahead of time for you. Give you a quick call and say, hey, are we going to renew this as is? Has something changed? Has the contents of your home gone up or down? You got anything going on? We know one thing for sure. We know every year when we call you, we know one thing for sure. Your roof's a year older. Your house is a year older. Your windows are a year older. Your water lines, your electrical is a year older.
And the new appliances too that they have out now.
We know that as time goes on, things do change, whether you want to look at that or not. So you got to look at that. Another thing we talk about, this doesn't come up a lot. In fact, I haven't talked to you about this in a while, but another thing is some people, you were talking about cash buyers, it just made me think of this. Some people prefer to just have warranties. You can actually have warranties on certain things in your home. Warranties on the furnace, the roof, etc. And sometimes
that's fridge and stove.
Yeah, sometimes that's a cheap way. And when you said paid cash, it made me think of a time from the past. And sometimes that's what people do on their cottages or trailers. If they have a mobile home or places are up there, even if they're year-round living in it, but they don't qualify for the normal policies. Sometimes the hunting, our friends that are hunters, and a lot of them in Allegheny, all these different areas where they have a cottage for the winter, they just want to ensure the warranty, the mechanisms, the furnace, air conditioner, what have you. Now you're only talking about insuring the appliances, basically, right? That could be very cheap. So if you're in that scenario, give us a call. We actually have some carriers. We have some people that offer warranties on the roof, on the HVAC. We'll call it HVAC, and you can kind of pick and choose what matters to you. I had to redo in my home. I had to upgrade, completely replace. We have a boiler water boiler for the, and 3 levels.
Oh my gosh.
Yeah, so when that went, believe me, folks, I was on service well. I know how to fix most things with duct tape, but let me tell you, I had to call a professional. Luckily, I found a really good one referred to by a neighbor. Um, another testimony why referrals matter, So, referred to by a neighbor who had, 2 generations of family living there. Said, look, this is the person to talk to. And I did. The person did a fantastic job, gave me a way better price. I did call other companies, but I had to replace it. And it was significant. It was more than any car I had purchased ever. Of course, I don't buy new cars, but that's not the point. It was significant. And I did realize after the fact, I'd only lived in the house a few years. I thought, if I had bought that warranty, that I remember it would have been a few $100 as opposed to the thousands that I paid.
Right.
So, the term buyer's remorse. There's the remorse you have when you don't buy the policy. When you actually could have had it replaced much cheaper. I wish I did that.
I was just, you were thinking about knowing your policy, right?
Mhm.
Do you remember when I had to replace the sewer line?
Oh yeah. Oh yeah.
Whole entire line
Yeah.
wasn't covered.
Yeah.
None of it was covered.
Yeah.
Like holy moly,
Yeah.
it was not covered.
Yeah. So it's
really
tough.
important to read through your policies.
Yeah, absolutely.
Know what the coverage is.
Yeah. So line by line, and the exemptions. You gotta look at exemptions. Oh, last thing, and we gotta go. First of all, thank you for sitting with us. I know it's a longer video than most. The last thing is with all the remote workers of the last few years, the amount of policies that haven't, the amount of carriers rather that haven't really addressed home workers. If you have a job that you work from home, or you have a business from home, you might be an office admin of some sorts that can log in from home from time to time, hybrid. Well, think about that. Now you are using your home for business. That opens up a whole new chapter, and I won't make you sit through another video about it right now, but I'll tell you what, if you're a
They
home
can just
worker,
call you.
yeah, if you're a business owner, you work from home, you have any income from home, your homeowners, this is just like the car thing. People use their cars for side gigs, Uber drivers, all that stuff. You got to think about your insurance, folks. It's no big deal until it's the biggest deal. And sometimes, you won't get coverage because of some exemptions that you didn't realize you signed off on. So, to be continued. Yeah, to be continued. That's a whole nother topic. So thanks so much for joining us today. I know this is a longer one, but I hope we covered a lot of things that made you think about how it impacts you, your family, your loved ones, people in your network. Share this video with them, and we'll see what we can do.
See you later. Bye.
Take care.